And in our world business news, the Organization of Petroleum Exporting Countries, or OPEC, has failed to agree on an oil production boost for the first time in 20 years in what Saudi Arabia's oil minister described as one of the worst meetings we have ever had. That sent oil prices rising 3% yesterday and today. Talks between OPEC members, which account for about 40% of the world's crude output, broke down without the group reaching an agreement about increasing output levels by 1.5 million barrels a day to a total of 30 million barrels. Saudi Arabia, the largest oil exporter worldwide, led a group of 4, including the UAE, which pushed for a boost. But 7 countries, including Iran and Venezuela, were against raising quotas. OPEC Secretary General Abdullah Al-Badri tried to temper the discord, saying OPEC is ready to supply the world with as much oil as needed.
We will supply the world with enough oil. We don't want to stir up the world economy. We would like to keep price at a reasonable level, where it's reasonable for producers and consumers.
French Finance Minister Christine Lagarde, the top candidate to run the International Monetary Fund, said today that she had positive talks with top Chinese officials about her candidacy. China, however, has not officially given Lagarde its support. The world's second-largest economy has joined other big emerging economies like India, for instance, in demanding that the IMF be more open to their demands. Lagarde indicated she was listening to those demands. She said she supported the decision to nearly double China's voting rights at the IMF from 3.65% currently to 6.4%. Meanwhile, the International Monetary Fund is urging China to let the yuan rise further to rebalance its economy. The acting IMF chief, John Lipsky, said the appreciation is just one aspect of a wider package of reforms that would support China's long-term objectives.
Measures to further strengthen the social safety net, especially pensions and health care, rationalize the cost of capital, of energy, and of other factors of production, and find ways to increase household income and boost household standards of living. A stronger renminbi will be one ingredient of this comprehensive package of reforms that would support the objectives set out in the 12th five-year plan.
Germany's finance minister Wolfgang Schäuble cast renewed doubts on Greece's financial stability. He was quoted in a newspaper as saying that Greece needs substantial fresh aid from the Eurozone to avoid the single currency bloc's first state insolvency, and bondholders might have to wait 7 years for repayments as part of a rescue. The paper said Schäuble argued for a new bailout of Greece with a substantial expansion of European aid and with private creditor involvement. Traders on Germany's main stock market in Frankfurt said the Greek issue was continuing to bug investors.
The markets are well aware, and they are smart markets, that we need a solution to get rid of debt levels. Greece is not able to get on a long-lasting survival path with this high debt levels. That's why we need a restructuring of debt, meaning that even the private investors will take a big portion of responsibility. The only question is how.
Before we go, here's a quick overview of the Asian equity indices as well as the oil and currency markets. And after that, Laura Buckwell is back with the news.